Dow Industrials holding in positive territory for the year following that big rally in October, up 9%, the biggest monthly gain for stocks in 4 years. Now, investors focused on the jobs report out this upcoming Friday. We will have the ADP reading on private payrolls out later this morning. That may very well give us a clue into what the numbers come on Friday. I want to bring in Tony Roth right now. He's the Chief Investment Officer at Wilmington Trust with $80 billion in assets under management. Good to see you, sir.
Good morning, Maria. Thanks for having me.
Get jobs number out on Friday. Give me your expectations there. What do you think we'll see from the jobs number?
I don't think we'll see a spectacular month, but I think we'll see enough strength to set us up for a potential rate move on the part of the Fed in December. I think the Fed really wants to move. Of course, I predicted they'd move in September, and I was wrong. But I think we've got a reasonable chance that they're going to move in December at this point. We've got a little bit of inflation starting to creep into some of the CPI numbers. We've got a little bit of productivity growth. We've seen the best productivity growth that we've seen really in several years. We had about 2.5% productivity growth on an annualized basis in our last jobs report. And so, even though it was weak overall, so I think that we've got a reasonable chance for a good holiday season and a Fed move. And I think that bodes for a relatively optimistic scenario for equities.
So you're bullish on stocks?
We're bullish, but the thesis is that in a zero interest rate environment, we can get up to maybe 20 times forward earnings with a 2.5% growth rate. I don't think we're going to really exceed that.
So not much more big move from here.
I think maybe another 100 points on the S&P over the next 6 to 8 months.
So, Tony, you talk about the consumer. You know, we've talked so much about energy prices and the prices at the pump being down, but not really seeing that trickle into sales, in the stores. But I'm in the camp that the holiday season is going to be very strong, that you're going to see people go out and spend money for the things that they want. Do you agree with that?
I do agree with that. And in fact, if you look at the automobile sales numbers that we received earlier in the week, right, I think that's very telling. It's not just that people are buying bigger vehicles, they're buying more vehicles. And so what do we have, a 7-year high in automobile sales in terms of absolute numbers of units?
But aside from autos and housing, that's about it, right? How come they're not spending more money so far, even though oil prices have been down so much? How come we haven't seen that kind of spending that you're talking about? What's going to change their minds now?
Well, if we look at the confidence numbers, consumer confidence numbers, consumer sentiment numbers out of Michigan, I think they've actually held up reasonably well. And so coming into the holiday season, we look at the Federation for National Retailers. They're expecting that will be up around 3 to 4% in the holiday season. Now, so I think there's a lag effect, and I think the lag effect is starting to wear off, is what we're seeing at this point.
Tony, this is a multi-year recovery. Granted, not a very spectacular one, but it's very long in the tooth right now. And often the sun is most spectacular right before it goes down, right? So this is very, very late cycle right here. Do you really believe, if you're right about the Fed, that if the Fed starts to tighten this late in the cycle, that the economy, the global economy, can handle that?
Well, I think I think the answer is yes, right? And I think that if we look at what's happening in Europe in particular, as an example, right, Draghi just said over the weekend he doesn't think possibly that they need another stimulus in December. So I do think that the stimulus seems to be working on the margin. We're seeing better growth out of Europe. The big wild card in my mind is China. Right. So the Chinese have now come out just in the last week and made some pretty radical changes. Right. They've said that their floor is 6.5%, and right. I don't think there's been enough attention on what it really means for them to abolish the one-child policy. Why are they doing that now?
We should point out that you're not overweight equities, even though you seem bullish. You got the largest cash pile on hand in a decade, 9%.
Well, I think the risk premium, right, what we can expect for taking extra risk in equities is relatively small. So I think that the market could support forward earnings maybe up to 20 times with a 2.5% growth rate. I think that in order to justify paying more than 20 times forward earnings, we've got to see growth on a sustainable basis in the 3+% range. And I'm not sure I see the basis for that.
There you go. Tony, good to have you on the show today.
Thank
you so much. Tony Roth, Wilmington Trust.